VA mortgages. What's going on, guys? My name is Minh with What's a Mortgage. Tonight, we're going to go over VA mortgages. If it's your first time tuning into our live stream, welcome, welcome, welcome. The goal of our live stream is to educate, empower, and to connect you with the right mortgage. All right, guys. Tonight, by popular demand, we're going to go over VA again. I had a couple new things to our VA slideshow that we haven't put in our old VA slideshow. So if you are buying with a VA mortgage and you've watched my video before, stick it through because we are going to talk about some new things. Also, if you know anyone who's a veteran who's interested in home ownership, share this video with them. If you're a veteran watching, please ask a lot of questions. If I bring you any value tonight regarding VA mortgages, do me a favor, hit the like and share button, okay? Thank you guys so much. It helps the algorithm so much when you do so. I got bug bites or something, man. I'm just itching today. All right, guys. Hopefully you have a great day. Let's see here. Okay, cool. Let's get into it. VA loans, right? So VA mortgages are the most popular mortgages out there right now. Why is it so popular? Because it's pound for pound the champion, right? It is a champion. Why is it the champion? Because there's no private mortgage insurance. It's 100% financing. You get more bang for your buck with a VA mortgage, okay? That's why everyone is jumping the gun. If they are veterans, that's what they're doing right now, right? If there's a time to get a VA mortgage, it is now. Why is that now important? Because rates are at an all-time low. If you're watching this video, August 2020, rates are an all-time low, especially for veterans. You can get it 100% financing. You can get low interest rates, and there's no private mortgage insurance. That's why it's so popular, right? So you get more bang for your buck, okay? So let's get into it. So if you guys watch my Ultimate Mortgage Guide videos, if you watch what I teach, I pretty much teach how to unlock a mortgage. And I always have the same sequence, right? The 4 keys to unlock a mortgage: identity, credit, income, DTI. And then the second half of my book is typically called What the Fees. We go over down payment, down payment, how to calculate your mortgage payment, closing costs, right? So definitely tonight you'll see that sequence with a VA mortgage. All right, guys, let's get into it. So the first key to unlock a VA mortgage: identity, right? So when you're buying with a VA mortgage, right, there's 3 parts of identity. So when a VA mortgage, the identity is probably one of the most important keys to unlock, right? When we're talking about the Ultimate Mortgage Guide, people don't pay attention to identity as much. People forget about it. If you're talking to a lot of lenders, they do forget about identity, but do not forget about identity if you're buying with a VA mortgage. Of course, if you are familiar with VA loans, or if you're not, of course, you have to be part of the military for at least 90 days during wartime or 181 days during peacetime, right? If you're in the National Guard or the reserves, it's 6 years plus, okay? If you are a spouse to a deceased military person, then you qualify, okay? As long as they were honorably discharged, of course. So, of course, that's the identity part of, that's the military identity part of identity, which is the first key to unlock a mortgage. Second is the property identity of a VA loan. You can go with a single family home. You can go with a PUD. You can go with a townhome. So, definitely property ID, right? It's single family home, townhouse, okay, PUD. If you buy a condo, the condo must be VA approved, just like FHA, okay? So remember, if you're going with the condo, make sure it is HUD approved, okay? You can get a manufactured home. You cannot do mobile homes. You can get duplex, triplex, or fourplex. But remember, when you are buying units with a VA loan and you're using the other units to qualify for the mortgage, right? You can use 75% of the rental income, but you must use a property management company to use the income. If you've never been a landlord before and you're buying with a VA loan, you must use a property management company. But if you've owned rental properties for more than 2 years, you do not need to use a property management company, and you can still use the rental income, okay? Also, occupancy, right? It's for owner occupied only. If you're buying a home with a VA mortgage, I know some of you guys are in the military, you get out like, I'm going to use my VA loan to buy an investment property. You must live in the property for 12 months then you could rent it out. If you don't move in within 60 days and live in there for 12 months, you're breaking the rules, all right? So it's for owner occupied. If you are selling a house to upgrading, you can do that. It's called the VA restore. You can restore your entitlement, okay? So if you have one VA loan, or if you don't have a VA loan and you buy another property with VA, that's okay. But if you have a VA loan and you want to buy another one, you have to, a lot of times you have to sell the current property to restore your entitlement to buy your next VA loan. With the entitlement, there's two types of entitlement. There's basic entitlement, which you're pretty familiar with, right? Is you have one VA mortgage, right? If you have a home, that's VA, you sell it and you get another VA loan. It's restoring it. It's basic entitlement. Some of you guys, you're in the military and you're getting moved from one place to the next and you want to keep your current VA mortgage, which you can if you get relocated, right, by the military. There's something called the secondary entitlement, right? Which means there is a formula depending on your loan amount, how much your entitlement is, and your new county you're buying. It's very county specific, and then the loan amount as well. And you figure out something called the secondary entitlement. Once you figure out the secondary entitlement, then you can upgrade it with a VA loan and keep your current VA mortgage, right? It is rare, but I do see them out there. But if you're thinking that you're going to buy a home with a VA mortgage and all of a sudden keep that and upgrade to the next one, that really doesn't happen unless the military is moving you. It's highly unlikely to happen. Yes, I'm sure you hear stories that, oh, my friend so-and-so. Yes, everyone has a story of a friend, but does it really happen? Not too often. Like I said, typically you'll have to sell your VA home and upgrade to another VA home, okay? You cannot keep both. There is exceptions, but definitely if you want to find out more about exceptions, please reach out, okay? So those right there are the three pillars of identity, right? The military identity, the property identity, and the occupancy. Remember, owner occupied, okay? So next slide, right? Remember, we're going to reiterate, right? Know these rules. With VA, if you're buying your first VA, you really don't have to stress about it. But if you are selling to upgrade or you're buying your second VA, you must understand the VA entitlement, basic and secondary, okay? If you want more details, definitely reach out. Remember, also, if you're buying with a VA mortgage, the co-borrower must be your spouse. It cannot be your brother, your cousin, your mom, your dad, your sister. It must be your spouse, right? Remember, they're loaning you 100% in financing. No MI, low interest rates, right? So that's why you're able to buy it owner occupied with a spouse and not with other people, right? It's for you and you alone, okay? Also, with VA, right? If you are married, even if they're not going on the loan, you have to run your spouse's credit, right? They have to add the monthly liabilities towards your debt as well. So if you're a veteran buying and you are married legally, you have to run your the spouse's credit, no matter if they're going to be on the loan or not, okay? Also with VA, there's something called, with FHA, there was a 100-mile rule. In VA, there's no 100-mile rule. What's the 100-mile rule? When you're buying a home with an FHA loan, right? Let's say you currently have a property and you buy your new loan with an FHA loan. If the property is within 100 cannot be within 100 miles. If it is, you can't use the vacating income to help you qualify, which means the vacating rent, right? So with VA, they follow a lot of FHA rules, but VA does not follow this 100-mile rule. So if you have a loan, your conventional loan, right? Or an FHA loan, you can buy your next home with a VA loan and you can use the vacating rent to help you qualify for your new home, right? So there's no 100-mile rule, okay? Also with VA, remember, you cannot use the GI Bill as income, right? Because it's not permanent. I see people try that a lot, is use the GI Bill as income. Does not work that way, okay? Next one. With VA, typically before it was 500, after the pandemic, they've raised it to 580s. Yes, there are lenders still doing under 500, but majority of lenders right now are doing 580 and up, but most of them are doing 620, okay? So when you're going with a VA loan, If you want that best deal, you want the best deal, you for sure 620 and up will probably get you that low interest rate that everybody's talking about. Also with VA, you make sure you follow the public records. 2 years for the bankruptcies, right? 2 years for the short sales, 3 years for the foreclosures, and 2 years for the repo. Okay. If you are going with a VA loan, remember, if you have a child support payments, they gotta add the payments onto the DTI, right? If you have IRS payments, right, you have to show proof of 3 payments and then add it to the DTI to qualify. So when you're going with a VA loan, they are strict when it comes to IRS and child support. They want to see that proof. They can't just take a letter like a conventional loan. They want that proof, right, to account against your DTI. Then you can qualify to buy. All right. So next one, trade lines. With VA, just like conventional, just like FHA, you tally up your monthly liabilities, right? You have your revolving debt, you have your installment debt, you have your mortgage debt, and you have your collection, right? Remember, collections, anything over 2,000 times it by 5%. Under 2,000, right? You don't have to add it to the monthly liabilities, okay? With VA, they have the same credit rules as FHA, right? Like I said, except for that 100-mile rule, VA follows FHA's guidelines almost to the T, right? With student loans, it's 1% or the fully amortized payment. Yes, there are veterans with student loans. I know with the GI Bill, you shouldn't have student loans. I still see student loans pop up even for veterans. So it's 1% or the fully amortized payment, whatever is greater, right? If you have less than 10 payments left, right? For them to omit it, right? Remember, the payment has to be less than 5% of your monthly income, right? So if you're a veteran and you have less than 10 payments left on an installment debt, right? Your monthly gross income, the payment cannot be greater than 5% of your monthly gross income. Okay, that's how it works with credit. Remember, with going FHA and going VA, they're a lot stricter when it comes to these guidelines, right? Because remember, they're loaning you on an FHA with a low down payment, right? And low interest rates. With VA, it's 100% financing, no MI. So they are going to be a little bit stricter, okay? So assets, income and assets, right? There is no income limit for VA. If you have any non-taxable income, you can gross it up to 115%. For example, on $2,000, you can gross it up to $2,300 a month. And one more thing about income, I'm reminding you guys, right? You do not count the GI Bill as income. I see people do it all the time, right? They get the GI Bill, they go out and they buy their house, and they realize, guess what? You cannot use the GI Bill as income, okay? Here we go. So when you're going with a VA mortgage, you have to pass 2 tests. Typically with FHA and VA, there's a debt to income ratio test, right? With going conventional or FHA, right, there's just a DTI test, right? A debt to income ratio test. But with VA, there's 2 tests. Of course, there's your typical debt to income ratio test, but there's also your residual income test. Because you're borrowing 100% financing, no MI, they want to make sure you're able to live, eat, and have a merry life when you're going with a veteran mortgage, right? So there's a residual income for under 79, for a loan amount under 79,000. Of course, you won't find that anywhere on the West Coast. You might find it in the Midwest or East Coast somewhere, right? So over $80,000 loan amount, right? There's one person on the loan. There's 2, 3, 4. One person in the house, 2, 3, up to 5 people, right? Depending if you're from the Northeast, Midwest, South, or the West. Right, well, what state belongs to what? Don't worry, I took care of you. So I added all the states on here, and I left the formula on how it works on here. Pretty much it's your gross income minus your installment debt, revolving debt, child support or child care, your complete mortgage payment, right? Your utilities. This is how they calculate your utilities, right? They're going to take the square footage of the home, times it by 0.14%, right? And whatever it is, that's so. For example, here's an example on a 2,000 square foot home at 0.14. That's $280 a month, right? That means on your residual income, right? You have to subtract that from your gross income. So you subtract the 280 plus your right? Plus your taxes. Once you have that number, now, right, whatever's left over, you must have more than what's left over for your residual, right? If you are under that amount, you cannot go with that VA mortgage, right? So there's two tests. There's the residual income test, and then there's the DTI test. And we all know DTI. Take your gross income, times it by 40%, 45%, 50%, or 55%, okay? And that will tell you the max you can spend on your complete mortgage payment, tax, insurance, right? And all your monthly credit obligations, okay? With VA, they let you go up to 55%. But you know my feeling, if you're going to go past that 45%, please make sure there's someone else who's going to help you with the mortgage payment, who's going to be living with you, right? They can't go on the loan. That's why your DTI is high. But if you're making the payment by yourself, and I know you can go past 45% DTI, be very, very careful, right? If you want that good quality of life. You don't want that DTI to be too high, okay? Also, let's get into down payment. Of course, VA, it's 100% financing. But before 2020, there was a rule. Anything over the loan amount, you got to come in with 25% of the difference. Whatever the max loan amount is for your county. For example, if you went over by 100,000, you would have to come in with $25,000. But the Blue Water Navy Vietnam Veteran Act allowed you, if you go past the county loan limit to purchase your property, right, you don't have to come in with a difference. That's why they raised the funding fee up to absorb the cost and the risk, right? So, for example, if you were buying in Orange County, right, and you went past 700-some thousand for the loan limit, if you bought $100,000 more, you would have to come in with $25,000, right? So now you can go up to $1 million for a single family home, right, with the Blue Water, right? If you go with units, right, I think for single family, I think you can go up to $2 million as long as you have above a 680 credit score, right? So now if you're a veteran and you hit the jackpot, you have a great job after you got out of the military, right? Guess what? Now you can buy that mansion you were looking for without coming in with the difference of the money, right? If you're buying units, I think they let you go up to $1 million. Every lender has a different overlay. Definitely reach out to a lender. If you're buying Orange County, LA County, Riverside, San Bernardino, right? Any county, if you're going above the limit, talk to your lender. What's the max limit in that county using the Blue Water Navy Vietnam Veteran Act, okay? So now you are empowered as a veteran to get more home, okay? Here's how to calculate your VA mortgage payment or in the funding fee, right? So rules have changed, right? With that Blue Water that came out, right? If you had 10% disability or more, your funding fee is waived. But now, if you have a Purple Heart, your VA funding fee is waived, right? So if you're buying a house, right, and you're a veteran, you can get that funding fee waived. That's so awesome, right? Because sometimes the funding fee is like 2.33%. You know, it all depends if you're refinancing, right? If you're doing a regular purchase, it's so much cost now. So might as well, right, take advantage if you do have 10% disability or more, or you have a Purple Heart, you can get that funding fee waived, okay? How to calculate your mortgage payment, right? Remember, with VA, it's just the principal and interest, the taxes, right, and the hazard insurance. Unless you were buying a condo, then you have HOA, okay? So that right there, my friends, is your VA loan. And there's one more bonus. With veterans, there's something called the non-allowable fees and the cost, right? With VA, there's a 1% fee. The total cost doesn't include your impounds, right? Cannot supersede 1% of the purchase price, right? So with veterans, you are well protected going VA, right? So pretty much they're not counting your impounds. They're just counting your total fees. Can't go past 1%. And you also have fees that are not allowable. If you are going with a VA loan, right, you do not have to pay for the appraisal up front. So decide you don't go with that house, you're not stuck with appraisal. Also, if they have to reassert the value or go out there again with VA for one of the non-allowables, you don't have to pay for the charges for them to go out to the property again, right? It's very specific. They're there to protect all veterans, okay? So they want to make sure you're getting a good deal, and they're making sure you're not getting the wool pulled over, right? You've served our country, right? You've defended America, and this is your blessing with your VA mortgage, okay? So if you have more questions regarding VA loans, definitely reach out to us, right? So, of course, I'm going to go into some Q&A, but before I go into Q&A, I want to thank all you guys who watch, who engage, and who share. Thank you guys so much. We end all our live streams with our attitude is gratitude. Without you, there would be no us. So thank you guys so much. Thank you for all the veterans that served our country, right? So let's go to some Q&A here.